The fascinating thing is that as we see the silver price and also the gold price, incidentally, rising, open interest on COMEX is declining, which tells us that this is just a squeeze on the system.
Gold was trading around 4,000 an ounce and silver about $48 an ounce. Gold has recovered to 4,200 or so, still away from its previous record high, which was like $150 or $200 higher. Silver, on the other hand, surged to recent new all-time highs with over $58 per troy ounce.
Alasdair Macleod reveals silver's perfect storm. China stopping price suppression, while India's 300 million middle class creates massive industrial demand. 54-year derivative distortion, unwinding creates physical squeeze, with 1.2 billion ounce shortfall. Fiat system ending like Weimar Republic. Dollar collapsing under 44 trillion foreign holdings. Japan's carry trade unwind means U.S. Treasury funding crisis. Bond yields could hit 20 to 100% as currencies implode. Crisis accelerating. Next few months can't persist beyond Q1. Only safe haven, gold and silver. China cutting exports January, India's photovoltaic boom ongoing. Get out of credit, into real money. Subscribe to Fine Metals for further updates.
In the case of Germany in 1921, December the 1st marked the crash, if you like. But the crash was softened. It only fell 25% on estimates. But if you looked at the value of stocks in gold, they lost 93%. We've had a shortage of supply for the last 6 years or so. Meanwhile, industrial demand has continued to grow and grow and grow. I mean, the shortfall over the last 6 years works out at just a little less. Well, I think we've sort of already covered it. I mean, if you got the end of the fiat currency system, then measured in fiat currencies, gold is, well, I quoted Reichsmarks. I mean, an ounce of gold in Reichsmarks went from 90 in 1913, when the gold Reichsmark was suspended, to around about 100 trillion per ounce of gold in November 23. According to the US Treasury tick figures, they have a total of over 44 trillion of dollars and underlying dollar financial investments. 44 trillion. Bear in mind that US GDP is in the order of about 30 trillion. I think from memory, it's something like 50%, whatever. I think that ahead of that, the Chinese could see that the price of silver, demand for silver was running away, and they couldn't really control it anymore. They have decided that they need to protect their own silver stocks, which they will have accumulated a lot. I mean, it's bear in mind that the management of the nation's silver resources is in the hands of the People's Bank, along with gold, because they regard it as precious metal. They regard it as money, if you like. And this is the trouble. And it's happened at a time when India is growing. It's growing like China was 20 years ago. The rate of economic development in India is staggering. ETFs have grown, not from a large base, but I mean, they've grown very, very substantially, which indicates, if you like, the sentiment there. The other thing is that, you would think with these high prices that a lot of jewelry and, other bits of silver would be shaken out into scrap markets. Is that for the last 54 years, the authorities, and particularly the Americans, have encouraged the growth of derivatives. And it is derivatives which have soaked up demand. And that has enormous implications for everything. If you look at bond yields in Germany, not too far away from you, are rising into new high ground. And you look at Japan, I mean, the 10-year is nearly yielding 2% now, which is just absolutely unbelievable. The point about both the euro and more particularly the yen is that these are the basis of the carry trade on which US Treasury financing has been increasingly depending. is actually very similar to where the Reichsmark, the Reichsbank, was in the second half of 1921. Anything that's tied to the dollar is going to go down. It's as simple as that. You've got to untie yourself from the dollar. The Chinese are already doing this. I mean, they've put in place the ability to settle trade in either gold or yuan with the Shanghai Gold Exchange opening vaults in Hong Kong and also Saudi Arabia. And also there will be arrangements throughout Southeast Asia, throughout BRICS, the Global South, Shanghai Cooperation Organization, etc., for trade settlements to occur in yuan, which will be, which can be exchanged for gold. All they haven't done yet is actually fix the rate. But they will have to do that, I think, to stop the yuan going down with the dollar at some stage. My advice is always the same: get the hell out of credit. And if you're getting out of credit, where do you go? Well, there's only one place to go, and that is real money, which is gold. To a lesser extent, silver. I don't think silver will ever really come back as official money, if you like. But, there is no doubt about it that there is a very large proportion of the global population that still regards it as money. And at the moment, that price is being driven entirely by this squeeze from industrial demand, while at the same time, China is reducing her supplies into the West. We could get the cracks in the system actually destabilizing the whole thing before bond yields really start soaring. And when I look at bond yields, I mean, bearing in mind that we're looking at currencies collapsing in their purchasing power. I mean, the yields on bonds, how high can they go? Well, pick a number.
Yeah.
20, 30, 40%, 50%, 100%. I don't know. But it's that direction because all these governments are getting into debt traps. That's the other thing about it, of course. And we've talked about the end of the carry trade, what's going on with Japanese institutions, what motivates them in terms of do they invest in US treasuries or do they invest in their own bonds, etc. The changing, if you like, landscape for global government bonds, I think is already indicating that things are going to come unstuck really quite quickly. It's just a question of when it happens. I think it's probably going to start happening in the next few months. I can't see the situation really persisting beyond the first quarter of next year. We can see the drivers of inflation beginning to really get going again in America, one way and another. And this is something which I don't think anyone's talking about. But you can see that if we get inflation coming back, when the Fed is trying to reduce interest rates and a bubble is popping, when that bubble pops, I mean, they're going to have to basically, print in order to save the banking system, save also all the zombie corporations, try and stop unemployment rising, et cetera, et cetera. So, I mean, you can see the acceleration of the increase of base money for photovoltaic cells and electric vehicles and all the rest of it is that demand is unlikely to change much on a big price hike, because this is all driven by government diktat. We must get rid of the carbon footprint, all this sort of stuff. And that's not going to change very quickly. It's dramatic. It really is dramatic. And, this is sort of partly my mission, if you like, current mission, to try and sort of get people to understand this. I doubt we'll get the political class to understand it because their terms of reference for what their electorate wants. Their electorate is just totally ignorant of these facts. And they're all chasing, we want the government to give us more money. They're all in that mode, and that's not going to change. And that is, Argentina has had decades of economic destruction, of destruction of the value of credit in their own currency, and so on and so forth. So everybody knew that something had to be done. And this is why Millet got, he got a landslide. And, he was given a clear mandate by the people. There's no way the population in any of the European countries or America could get that sort of, would give a politician that sort of mandate, because we haven't had the decades of complete destruction. And, the situation in Argentina is the bureaucrats basically were living high on the hog where everybody else could go to hell. And it was like that for decades. And eventually the people said, we've had enough of it. I mean, the currency has sort of held up, been buoyed up, if you like, by the system in a way which didn't occur in the Argentine. Sorry. So, in France, it's absolutely classic. Ordinary people go about their own business despite the government. The government, is just, quite frankly, finds that it's impossible to do anything, if you like. I mean, for a start, they haven't got a clue what they're doing economically. And secondly, they haven't got a mandate to do anything anyway. So all they do is they just jump around on the global stage, with Macron trying to sort of get together a policy on Ukraine and all the rest of it. They can't even change the pension arrangements. I think that, Brussels actually understands Belgium, rather than Brussels, not to be confused with the EU. The Belgians understand this, and they don't want to be on the hook for that theft, in effect. So I think that they're absolutely right. And I think, that along with, Viktor Orban, I think that, they will stand up against the EU. And I don't think the EU will get away with it. At least I hope they don't. Because that sort of theft is no good at all. It's really helped the Americans, not the Americans, the Russians as well, because they've been able to turn around to all BRICS and say, look, you deal with these guys, and look what happens. They steal. Yeah. They steal your money. That message, I think, is a very important message, and it's been very, very much received in the global South, who are already, sort of fed up with the idea that, the Americans basically bully you around. They bully you around by lending you money, which you don't really need in the first place. 10-year is always seen as the marker, if you like. Now, given that macroeconomists are absolutely clueless, you can treat that with a pinch of salt. But what's happened is that the yield on the 10-year, having risen and broken the long-term downtrend in yields, which started way back in the very early 1980s. Remember the yield on the US 10-year Treasury went down to under 1.5%. Suddenly shot up. Why? Because prices shot up and everybody was terribly surprised. And then after that, it's sort of, Fed raised interest rates and all the rest of it, and things stabilized a bit. But that's a consolidation, if you like, in an ongoing trend. That to break a 40-year-old downtrend in bond yields and assume, oh, don't worry, that's all over now. That's it. That's all history. We're back to normal. These are games for losers. They shouldn't really try and do it, because they just, A, they're overstretched, and B, they haven't actually got the firepower to deal with these places. And instead, their sphere of influence, I think, is the Americas. I think the deep state now understands this. People like Rubio and so on, who really deep state operatives. I think they understand this. And I think this is partly why they're trying to destabilize Venezuela. They're also trying to stop the drugs trade, which basically means that, at the end of the day, they're going to be taking greater political control, probably, of Colombia. Argentina is already in the, if you like, already sort of halfway there as far as the Americans are concerned. And Brazil, they're trying to effectively destabilize, the political situation in Brazil.